Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on euro currency. So today fundamental report shows that overall background for euro is not very good, not very friendly, because actually we have few important moments on this week. In general it was ordinary week. We have some statistics, European Central Bank meeting, so nothing really special and nothing breaking news have happened, but these two events provide important things that make us to lead us to some conclusions. So first of all, European Central Bank position is very dovish. So they said that they're ready for printing more money and buying back more bonds from the market if necessary to keep the interest rates low. So this statement has been made on the background of the actually negative interest rates in the European Union. While it's very different to the policy of the Fed that tells nothing, but they have rally on the interest rates. So this difference really stands not in favor of the euro currency. So the second moment is positive statistics in general. So initial claims have become lower. PPI also shows some inflation. CPI is not, but PPI stands closer in the business cycle. So it even shows some inflation stepping in. So also sentiment and spending also was not really bad and actually supports the idea of the reflation. So now add more points to the analysis who suggest that indeed market stands and in general economy stands in a recovery, in a reversal point. So that's actually what we have on the background currently on this event. And additionally, finally, the technical moment that if you will take a look at the recent CLT report, Commitment of Traders report, you will see the massive run out of the euro currency. So last week it was not as strong as this week, but in this week we have significant drop in the net long position on euro with the rising of the open interest. It means that the bears are stepping in and shows an increasing of the bearish positions. The hedgers do the same. They take the position to hedge the possible downside action on euro currency. So these things are not really good, and it means that our pullback that we're trading right now could fizzle, and ultimately, for instance, if this will become the result of the Fed meeting on next week, if Fed will express no concern about interest rates rising, so we'll tell nothing about that, and just ignoring this topic, supporting the interest to the dollar, supporting the rising of the interest rates. So that will be negative for the euro currency. Or maybe at some point the upside reaction could be not as strong as it was suggested initially. So it could be smaller. So taking it all together, here it will be probably better to wait for clear patterns. As I said, on the gold market last week on euro currency has also become important. So if you're trading the pullback right from the scratch and you're trading on a daily chart, you probably has bought somewhere right at the point where the A, B, C, D pattern has been completed, right on LP with the placing stop somewhere below this area. Well, for you it's nothing to do actually, because you already have the position with the stop below this level, and you just need to keep an eye on what is going on to control overall situation. Hopefully euro here was able to escape the bearish grabber. That is good for the market. But still, despite that we have large triple to buy pattern, we still need more to step in. So I'm talking about the people who do not have the position currently and they would like to buy euro, but still choosing the momentum where it's better to do. So on the hourly chart, I would suggest that it makes sense to wait for something like that. So actually our entry last week was based on the same pattern, got this triple to buy, you can see upward action, first swing, and ABCD retracement where we step in. So here's market mostly have hit the XOP, almost has hit the XOP. And currently I think that we could repeat the same stuff but on greater scale. So we could get initial upward action and ABCD retracement here to wait an agreement around 1880, 1890 area, where we could think about taking the long position again. Why we do not consider the possible upward action immediately, right from here? And why we suggest the in general downside action? Mostly, guys, based on this performance. You can see that this downside action yesterday, market has formed a bearish reversal swing. So you can see the swing down, it's rather strong. So the sell-off is not very slow. It's not like here. It's significantly faster. And market taken out of this low. So this swing down is greater than previous swing up. This is bearish reversal swing. So usually, in the most cases, it has the continuation. It means that this upward action we should treat as a pullback. You can see this ABCD XOP has been hit. Market turns down again. So that makes us to think about watching for another leg down. So maybe it will not reach the 618 precisely. Maybe it will be just back to the lows or something of that sort. But chance on downside continuations looks really probable. This is the basic scenario that we intend to keep an eye on. So, for instance, the same type of action you can find on the daily chart. So here is how it looks like on the fall time frame chart. Take a look. Spike down, upward action, reversal swing, and pull back. And then we expect that will be some downside action. Approximately the same type of action you could see on the daily, not too far ago, right here. So take a look what has happened. Spike down, upward continuation, then taken out of the lows, and after some retracement we see downside continuation. So this is feature of the reversal swing that could get continuation. I'm not sure that definitely will happen, or better to say probability keeps door open for immediate upward continuation. But in most cases it works like I just explained. So alternatively, what to watch for if market will not start downward action and start climbing back to the top. Well, in this case, maybe it makes sense to consider possible taking a long position if market will take it out of this top. Some stop buy order or something of that sort. So, in other words speaking, we need to get the clear sign or pattern of the upward continuation. Currently, we do not have neither of that. So, and we will be watching for a pattern if it will be, for instance, got this triple to buy. For signs, if market just will continue upward action, taking out of the stop. In this case, we could consider probably kind of the larger A, B, C, top, T pattern to the upside with the highest ending target. Something of that sort. But be aware of the Fed meeting Tuesday, Wednesday. So because not everybody trading through the important fundamental events, Fed meetings, statistics release. So act accordingly to your preferences.